Question 1. Title insurance principles. In Montana, an owner's policy of title insurance provides coverage against certain risks associated with property ownership. Which of the following is not typically covered by an owner's policy? A. Claims from undisclosed debts. B. Forgery of the deed affecting the title. C. Environmental hazards on the property. D. Encumbrances that were not disclosed in the title report. Answer: C. Environmental hazards on the property. Explanation: an owner's policy of title insurance generally covers risks related to the title itself, such as claims from undisclosed heirs, forgery of the deed, and undisclosed encumbrances. However, environmental hazards are usually not covered by a standard owner's policy. Coverage for environmental issues is typically handled separately and may require additional endorsements or policies specifically addressing environmental risks. Question 2. Title insurance claims. An insured party has discovered a cloud on their title that was not revealed in their title search. According to Montana regulations, what is the most appropriate first step for the insured to take in order to address this issue? A. File a lawsuit immediately against the previous owner. B. Contact the title insurance company to report the claim. C. Attempt to resolve the issue through negotiation with the local government. D. Ignore the issue and hope it resolves itself over time. Answer: B. Contact the title insurance company to report the claim. Explanation: if an insured party discovers a cloud on the title that was not identified during the title search, the appropriate action is to contact the title insurance company to report the claim. This initiates the claims process, allowing the insurer to investigate and address the defect. Filing a lawsuit or negotiating with the government are not the initial steps recommended. These actions might follow if the claims process does not resolve the issue. Ignoring the problem is not advisable as it does not address the underlying legal or financial risks. Question 3. Scenario-based. Sarah recently purchased a property and discovered a lien from a previous owner that was not revealed during the title search. She has a standard owner's policy of title insurance. What should Sarah do to resolve this issue, and what is her policy likely to cover? A. Sarah should pay off the lien herself as the policy will not cover such issues. B. Sarah should contact her title insurance company as the policy may cover the lien and the insurer will handle it. C. Sarah should ignore the lien and continue with the property purchase as if it never existed. D. Sarah should seek legal advice to contest the lien as the policy does not cover any liens. Answer: B. Sarah should contact her title insurance company as the policy may cover the lien and the insurer will handle it. Explanation: if Sarah discovers a lien on the property that was not identified during the title search, the first step is to contact her title insurance company. The owner's policy of title insurance is designed to protect against undisclosed liens and encumbrances, so the insurer will typically handle such claims by paying off the lien or defending Sarah's title. Ignoring the lien or assuming the policy does not cover it is not advisable, as title insurance generally provides protection against such issues. Seeking legal advice may be a subsequent step if the insurer does not resolve the issue to Sarah's satisfaction. Question 4. Risk management principles. Which of the following statements best describes the principle of risk transfer in risk management? A. Risk transfer involves reducing the likelihood of a risk event occurring. B. Risk transfer involves shifting the financial burden of a risk to another party. C. Risk transfer involves retaining the risk within the organization and managing it internally. D. Risk transfer involves sharing the risk with a partner or collaborator. Answer: B. Risk transfer involves shifting the financial burden of a risk to another party. Explanation: risk transfer is a risk management strategy where the financial impact of a risk is shifted to another party, typically through mechanisms like insurance or contractual agreements. This is different from risk reduction, which aims to decrease the likelihood of the risk event, or risk retention, C, where the organization accepts the risk. Risk sharing, D, involves distributing the risk among multiple parties, but does not specifically address shifting the financial burden. Question 5. Title insurance principles. Which of the following best describes the distinction between an owner's policy and a lender's policy in title insurance? A. An owner's policy covers the lender's interests in the property, while a lender's policy covers the owner's interests. B. An owner's policy provides coverage for the property owner's equity, whereas a lender's policy protects the lender's financial interest. C. Both policies provide the same coverage but for different parties involved in the transaction. D. An owner's policy is required by law, while a lender's policy is optional. Answer: B. An owner's policy provides coverage for the property owner's equity, whereas a lender's policy protects the lender's financial interest. Explanation: an owner's policy of title insurance protects the property owner's equity in the property against title defects, while a lender's policy protects the lender's financial interest in the property. The owner's policy is typically purchased by the property buyer, and the lender's policy is required by lenders to safeguard their loan amount. Both policies cover different interests and are not interchangeable. Question 6. Montana Title Insurance Regulations. Question: under Montana title insurance regulations, which of the following is not a requirement for title insurance producers? A. Completion of continuing education courses. B. Passing a state licensing examination. C. Maintaining a minimum level of insurance coverage for personal errors and omissions. D. Holding a professional certification from a National Title Insurance Association. Answer: D. Holding a professional certification from a National Title Insurance Association. Explanation: Montana regulations for title insurance producers require passing a state licensing examination and completing continuing education courses to maintain licensure. They also mandate maintaining insurance coverage for errors and omissions. However, holding a professional certification from a national association is not a state-specific requirement. It may be beneficial but is not mandatory for licensing in Montana. Question 7. Real estate transactions. In a real estate transaction in Montana, which document is typically used to convey the title of property from the seller to the buyer? A. Bill of sale. B. Deed. C. Lease agreement. D. Mortgage note. Answer: B. Deed. Explanation: in Montana, as in other states, a deed is the legal document used to transfer title from the seller to the buyer in a real estate transaction. A bill of sale A is used for personal property, not real estate. A lease agreement C pertains to renting property, and a mortgage note D is related to financing, not title transfer. Question 8. Title insurance claims. When a title insurance claim is made due to a defect that existed before the policy was issued but was not discovered during the title search, what is the primary role of the title insurer? A. To deny the claim outright as the defect was pre-existing. B. To investigate the defect and determine coverage under the policy. C. To offer financial compensation directly to the claimant without investigation. D. To provide legal representation in a court of law for the claimant. Answer: B. To investigate the defect and determine coverage under the policy. Explanation: the title insurer's primary role is to investigate the defect and determine whether it is covered under the policy. Even if the defect existed before the policy was issued, the insurer must assess whether it falls within the coverage terms. Denying the claim outright A is not appropriate without investigation. Offering direct financial compensation C, or providing legal representation D, are not the insurer's primary responsibilities in the initial claim process. Question 9. Underwriting and policy issuance. What is a common underwriting guideline for issuing a title insurance policy in Montana? A. The title must be clear of all liens and encumbrances. B. The property must be inspected physically by the insurer. C. The title search must reveal no prior claims against the property. D. The insured must provide proof of homeowner's insurance. Answer A. The title must be clear of all liens and encumbrances. Explanation: a common underwriting guideline is that the title must be clear of all liens and encumbrances to ensure that the title insurance policy will be valid and effective. Physical inspection of the property B is not a standard underwriting requirement for title insurance. Prior claims C are not necessarily a disqualifier if they are resolved or covered. Proof of homeowner's insurance D is not required for underwriting a title insurance policy. Question 10. Scenario-based. James is purchasing a property, and during the title search of previous owner's debt is discovered that was not listed in the preliminary title report. What is the best course of action for James to take given that he has a lender's policy of title insurance? A. Negotiate with the seller to pay off the debt before closing. B. Report the issue to the title insurance company to address the debt through the policy. C. Proceed with the purchase without addressing the debt, as it is the seller's responsibility. D. Seek legal advice to determine if he could pursue the debt from the previous owner directly. Answer B. Report the issue to the title insurance company to address the debt through the policy. Explanation: James should report the issue to the title insurance company. The lender's policy is designed to protect against defects such as undisclosed debts, and the insurer will typically handle such issues, negotiating with the seller. A. or ignoring the issue. C. Does not resolve the risk covered by the insurance. Seeking legal advice. D. Might be a secondary step but is not the immediate solution provided by the insurance policy. Question 11. General insurance concepts. Which of the following best describes the principle of indemnity in insurance? A. Indemnity involves restoring the insured to their pre-loss financial position. B. Indemnity provides a fixed sum payment regardless of the loss amount. C. Indemnity allows the insured to gain financially from a loss. D. Indemnity involves providing insurance coverage for potential future losses. Answer A. Indemnity involves restoring the insured to their pre-loss financial position. Explanation. The principle of indemnity in insurance is designed to restore the insured to the financial position they were in before the loss occurred, without allowing them to gain from the loss. This ensures that insurance provides compensation for actual losses rather than profit. Fixed sum payments B or future coverage D do not align with indemnity and gaining financially from a loss. C contradicts the principle. Question 12. Title insurance principles. In Montana, which type of title insurance policy is specifically designed to protect the lender's interest in a property? A. Owner's policy. B. Leasehold policy. C. Lender's policy. D. Abstract of title policy. Answer C. Lender's policy. Explanation. A lender's policy is designed to protect the lender's financial interest in the property, typically covering the loan amount. An owner's policy A protects the property owner's equity. Leasehold policy B covers leasehold interests. An abstract of title policy D is not a type of insurance, but rather a summary of the property's title history. Question 13. Montana title insurance regulations. What is a key requirement for title insurance producers in Montana concerning continuing education? A. Completion of at least 10 hours of continuing education every 2 years. B. Passing a national certification exam every 5 years. C. Attending annual seminars hosted by the Montana Department of Insurance. D. Maintaining a degree in real estate or law. Answer A. Completion of at least 10 hours of continuing education every 2 years. Explanation. Montana regulations require title insurance producers to complete a minimum of 10 hours of continuing education every 2 years to maintain their license. This ensures that producers stay updated on industry practices and regulations. National exams. B. Annual seminars. C. Or specific degrees. D. Are not state-mandated requirements. Question 14. Title insurance claims. When a claim is made against a title insurance policy for an undisclosed encumbrance, what is the insurer's primary responsibility? A. To negotiate a settlement directly with the claimant without investigation. B. To investigate the claim and determine whether it falls under the policy's coverage. C. To deny the claim immediately if the encumbrance existed before the policy was issued. D. To provide immediate financial compensation to the claimant without further action. Answer B. To investigate the claim and determine whether it falls under the policy's coverage. Explanation. The insurer's primary responsibility is to investigate the claim to determine if the undisclosed encumbrance falls within the coverage of the policy. Immediate denial, C, or compensation, D, without investigation is not appropriate. The claims process requires thorough review and assessment of coverage. Question 15. Real estate transactions. Which of the following documents is crucial for identifying the legal description of a property in Montana? A. Warranty deed. B. Purchase agreement. C. Title insurance policy. D. Survey report. Answer D. Survey report. Explanation. A survey report provides the legal description of a property, which is crucial for accurate title search and insurance. A warranty deed A transfers ownership. A purchase agreement B outlines terms of sale, and a title insurance policy C covers title defects but does not provide the legal description. Question 16. Underwriting and policy issuance. In the underwriting process for title insurance, which of the following is a common requirement for issuing a policy? A. The property must have a clear title with no recorded liens or encumbrances. B. The property must have a recent appraisal performed by a certified appraiser. C. The buyer must provide proof of home insurance coverage. D. The title insurer must conduct a physical inspection of the property. Answer A. The property must have a clear title with no recorded liens or encumbrances. Explanation. A clear title with no recorded liens or encumbrances is a standard requirement for issuing a title insurance policy. A recent appraisal. B. Home insurance coverage. C. Or physical inspection. D. Are not common underwriting requirements for title insurance, though they may be relevant in other aspects of property transactions. Question 17. Title insurance principles. Which of the following best describes an encumbrance in the context of title insurance? A. A legal right or interest in the property that affects the owner's rights. B. A financial claim against the property that does not affect its title. C. A document that records the transfer of property ownership. D. A type of insurance policy specifically for commercial properties. Answer A. A legal right or interest in the property that affects the owner's rights. Explanation. An encumbrance is any legal right or interest that affects the owner's rights in the property, such as liens, easements, or restrictions. Financial claims. B. A type of encumbrance, but not the definition, and a document recording transfer. C. Is a deed, not an encumbrance. An insurance policy for commercial properties. D. Is not relevant to the definition. Question 18, scenario-based. Ella is reviewing the preliminary title report for a property she is purchasing and notices an easement that was not mentioned in her initial property description. What should Ella do to address this issue? A. Accept the easement as part of the property without further action. B. Request clarification from the title company and confirm how it may affect her ownership. C. Ignore the easement and proceed with the purchase as planned. D. Challenge the title company's accuracy and demand a refund. Answer. B. Request clarification from the title company and confirm how it may affect her ownership. Explanation. Ella should request clarification from the title company about the easement and understand its impact on her ownership rights. Accepting it without clarification or ignoring it, C, could lead to issues later. Challenging the accuracy and demanding a refund, D, is premature without first understanding the implications. Question 19. Montana Title Insurance Regulations. What is a requirement for handling escrow accounts according to Montana Title Insurance Regulations? A. Escrow funds must be kept in a separate account from the title insurance company's operating funds. B. Escrow accounts must be periodically audited by an independent third party. C. All escrow transactions must be reported to the Montana Commissioner of Securities and Insurance. D. Escrow funds can be invested to earn interest for the title insurance company. Answer A. Escrow funds must be kept in a separate account from the title insurance company's operating funds. Explanation. Montana regulations require that escrow funds be kept in a separate account to prevent commingling with the title insurance company's operating funds. Independent audits, B, and reporting to the commissioner, C, may be required but are not specific requirements for handling escrow accounts. Investment of escrow funds, D, is typically prohibited to protect the fund's integrity. Question 20. Title insurance claims. If a title defect is discovered after policy issuance and it is determined that the defect was due to fraud, how should the title insurance company typically respond? A. Deny the claim, as fraud is generally not covered under title insurance policies. B. Investigate the claim and potentially cover the loss if fraud is proven. C. Provide a settlement based on the estimated value of the defect without investigation. D. Offer legal defense services to the insured to contest the fraud in court. Answer. B. Investigate the claim and potentially cover the loss if fraud is proven. Explanation. Title insurance policies typically cover losses arising from fraud if it is proven. The insurer must investigate the claim and determine if it is covered. Denying the claim outright, A, is not appropriate without investigation and offering settlement. C, or legal defense services. D, are not standard responses in the initial claims process. Question 21. Risk management principles. Which of the following best describes the concept of risk transfer in the context of risk management? A. Shifting the financial burden of potential losses to another party through contracts or insurance. B. Eliminating all potential risks associated with a property or transaction. C. Retaining the financial responsibility for potential losses within the organization. D. Identifying and assessing risks to develop a strategic response plan. Answer A. Shifting the financial burden of potential losses to another party through contracts or insurance. Explanation. Risk transfer involves shifting the financial burden of potential losses to another party, such as through insurance or contractual agreements. Eliminating all risks. B. Is not feasible. Retaining risk. C. Is not transfer, and identifying risks. D. Is part of risk management but not transfer. Question 22. Title insurance principles. Which of the following is NOT typically covered by a standard title insurance policy? A. Forgery in the execution of documents related to the title. B. Claims arising from undisclosed errors or errors in public records. C. Defects that arise from zoning regulations affecting the property. D. Liens or encumbrances that are not disclosed in the title search. Answer: C. Defects that arise from zoning regulations affecting the property. Explanation: standard title insurance policies generally do not cover issues arising from zoning regulations. C. They do cover forgery. A. Claims from undisclosed heirs. B. And defects from undisclosed liens or encumbrances. D. As these are related to title defects. Question 23. Montana Title Insurance Regulations. What is a primary requirement for title insurance producers in Montana regarding record keeping? A. Producers must keep records of all transactions for at least 5 years. B. Producers are required to maintain digital records of all transactions. C. Records must be audited quarterly by an independent auditor. D. Producers must submit transaction records to the Montana Commissioner of Securities and Insurance annually. Answer: A. Producers must keep records of all transactions for at least 5 years. Explanation: Montana regulations require title insurance producers to keep records of all transactions for at least 5 years to ensure proper documentation and compliance. Digital records, B, and auditing, C, are not mandatory, and submission of records, D, is not required on an annual basis. Question 24. Real estate transactions. Which document is essential for proving the chain of title in a real estate transaction? A. Purchase agreement. B. Warranty deed. C. Title insurance policy. D. Chain of title report. Answer: D. Chain of title report. Explanation: a chain of title report is essential for proving the chain of title, which traces the ownership history of the property. A warranty deed, B, records the transfer of ownership, and a title insurance policy, C, covers title defects but does not prove the chain of title. A purchase agreement, A, outlines the sale terms but is not used for proving title history. Question 25. Underwriting and policy issuance. What is a common exception found in title insurance policies that might impact coverage? A. Environmental hazards that affect the property's use. B. Pre-existing conditions related to the property's structural integrity. C. Claims arising from undisclosed liens or encumbrances. D. Restrictions or regulations imposed by local zoning ordinances. Answer: A. Environmental hazards that affect the property's use. Explanation: environmental hazards, such as contamination, are often excluded from standard title insurance policies because they affect the property's use rather than its ownership title. Pre-existing structural conditions, B, and zoning restrictions, D, are typically not covered under title insurance, and undisclosed liens, C, would generally be covered. Question 26. Title insurance claims. If a claim is made for a defect that was caused by an error in the public record, what is the typical response from the title insurance company? A. Deny the claim outright due to the error being in the public record. B. Investigate the error to determine if it falls under the policy coverage. C. Provide compensation based on the estimated market value of the defect. D. Offer to correct the public record error at the title insurance company's expense. Answer: B. Investigate the error to determine if it falls under the policy coverage. Explanation: the title insurance company will investigate the error to determine if it is covered under the policy. Denying the claim outright, A, is not appropriate, and compensation based on market value, C, or offering to correct the record, D, are not standard responses for title defects. Question 27. Scenario-based. John recently purchased a property, and after closing, he discovers a previously undisclosed lien that affects his ownership. According to Montana regulations, what should John do first? A. File a lawsuit against the previous owner immediately. B. Contact his title insurance company to file a claim for the undisclosed lien. C. Attempt to negotiate a settlement with the lien holder directly. D. Ignore the lien and continue using the property as usual. Answer: B. Contact his title insurance company to file a claim for the undisclosed lien. Explanation: John should first contact his title insurance company to file a claim, as the undisclosed lien may be covered under his policy. Filing a lawsuit, A, is premature. Negotiating directly, C, may not be effective, and ignoring the lien, D, could lead to legal issues. Question 28. Real estate transactions. What is the primary purpose of a preliminary title report in real estate transactions? A. To provide a detailed property appraisal for financing purposes. B. To outline the terms of the purchase agreement between buyer and seller. C. To identify any potential title issues or defects before the closing. D. To provide legal advice on property zoning and land use restrictions. Answer: C. To identify any potential title issues or defects before the closing. Explanation: the primary purpose of a preliminary title report is to identify potential title issues or defects that need to be resolved before closing. It does not provide property appraisals, A. Purchase agreement terms, B. Or legal advice on zoning, D. Question 29. Title insurance principles. Which type of title insurance policy is designed to protect a lessee's interests in a property? A. Owner's policy, B. Leasehold policy, C. Lender's policy, D. Extended coverage policy. Answer: B. Leasehold policy. Explanation: a leasehold policy is designed to protect a lessee's interests in a property, covering issues that may arise from the lease. An owner's policy, A. Covers property owners, a lender's policy, C. Protects lenders, and an extended coverage policy, D. Provides additional coverage but not specifically for leasehold interests. Question 30. Montana title insurance regulations. In Montana, what is the required minimum coverage amount for title insurance policies for residential properties? A. The amount of the purchase price or loan amount, whichever is higher. B. $50,000, regardless of the property's value or loan amount. C. $100,000 or the loan amount, whichever is higher. D. The full market value of the property as determined by appraisal. Answer: A. The amount of the purchase price or loan amount, whichever is higher. Explanation: in Montana, title insurance policies are generally required to cover the amount of the purchase price or loan amount, whichever is higher, to adequately protect the insured's interest. Specific minimum amounts, B, C, and market value, D, are not typically mandated.